How's it going, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex. We're going to be going over the most anticipated earnings for next week, as well as some stocks that you should be watching to play options on. Now, this week we have some good companies. We have a lot of banks, but also some airlines. We also have stuff like Domino's Pizza. We also have Taiwan Semiconductors. So we have a lot of interesting stocks reporting earnings next week and a lot of good potential plays. We also have some new stocks such as E2 Open. So what I'm going to be looking at are four stocks to play options on. They're going to be Delta Airlines, E2 Open, Bank of America, and potentially Wells Fargo. So these are going to be some really good companies, and we're really looking to sell options for these earnings reports because that's the best way to play earnings is to sell options, collect the high juicy premiums, and overall just some safe plays. And I chose these stocks because they're relatively cheap price stocks, so a lot of people can do that even if you have a relatively small account. It's only going to require a few $1,000s of collateral rather than tens of thousands of dollars. So the first one is going to be E2 Open reporting earnings Wednesday after the market closes, and this is a pretty stable stock around the $10-11 price point. As we see, the 5-year, it went public June 2020 through a SPAC merger actually, and it hasn't really moved ever since. It's up 15% or 10% the past year, 14% since it went public. And it's a software company, cloud software company. They offer software as a service. Overall, pretty decent company that hasn't been getting a lot of attention. So what we're looking for, there's some really nice support around the $10 price point. So we're going to be selling some options for next week, expiring October 15th. We're going to be going to sell, put. We're going to be doing the $10 option. As we said earlier, some really good support around the $10 mark. It doesn't really like to drop below that. And this is basically what we're doing. $25 of credit for opening this contract. Some pretty good return actually. That is going to be $25 for 2.5% in 1 week. The plan is to open this right before earnings, so Wednesday during the market, because it is reporting earnings after the market closes on Wednesday. So we're also looking at Delta Airlines to sell options. Delta Airlines been doing pretty good as a recovery play. It's almost back to its pre-pandemic levels, but overall Delta Airlines definitely not going anywhere. Really solid company and really solid airlines, in fact, up 31% the past year. So we're seeing some really good stuff. I did pull back a bit to around $38 back in August. So what we're going to be doing is heading into the options chain. First, let's take out the charts, see what some support lines are. Around $40, some really good support. We're going to be going to the options chain, and not much premium on here actually, so we can go further out the strike prices. Maybe like a $41 strike. That would be a 1% return in 2 weeks, 80% chance of profit. Not that bad, but there's also not that much premium. So if you want to stay away from this, you can. But I might open up a Delta Airlines $41 strike expiration date. So we also have to keep in mind that it is Sunday, so once it creeps more towards Wednesday, the premiums on these contracts are going to be a little bit higher just because the higher implied volatility. And remember, once the earnings gets reported, implied volatility drops, which makes an implied volatility crush and crushes the premiums on these contracts, even if the stock stays flat. So that's how we make a lot of money selling cash secured puts on stocks and companies that we really like for earnings. So 2 more companies, Bank of America and Wells Fargo. You could choose either or, reporting before open on Thursday. So we're going to head over to Bank of America. And this is Warren Buffett's one of his favorite stocks, doing really good actually, 75% in the past year. As we can see, it's exceeded its pre-pandemic levels, hitting all-time highs, basically all-time highs. So we'll have to really see what this company has in store for us. If we're bullish on it, we want to kind of look at this support here at $42, $43. So we're going to be selling a cash secured put around that level. Potentially 43.5, 73% chance of profit, and collecting a 1% return in a week. So that would be a potential play. But of course, we are at an all-time highs. So another play would be a call credit spread. Sorry. So let's over to the call side. We're going to be selling. We'd probably do a 46 sell, 47 buy, and as you can see here, $12 credit, putting down $100 collateral. That's going to be a 12% return in a week as long as BAC, Bank of America, stays below $46 at expiration. So that would be potential play as well. So Wells Fargo, last stock on our list, doing pretty well alongside Bank of America, almost 90% in the past year. That's impressive. As we can see, it's not at its all-time highs as Bank of America is. So there is some growth opportunities with Wells Fargo. A pretty good company as well. Good bank. Let's trade a Wells Fargo options. Let's see what the support lines are. So all-time highs was around $51 pre. No, that's August 2021. But we want to break 51, and we can see a lot of upside there, but I don't think that's going to happen. So we're going to play safe. If we want to play some Wells Fargo options, $46 cash kit put would be an optimal play, about almost a 1% in a week. And you're going to be getting shares at a cheaper price if you do want to own this company long term, because as we saw earlier, there is some more potential with this company and with this stock, as it's not really at all-time highs, just like Bank of America. So that would be a potential play right here. So that's about it for this video. If it helped in any way, please leave a like, comment down below what you're watching for next week. And of course, you want to open these contracts right before it reports earnings, just because you can collect the most premium. Implied volatility is going to be the highest, and you can close it immediately after the earnings report for a nice profit as long as nothing significant happens. Of course, subscribe if you're new to the channel. Helps out a lot. Thanks for watching.